What do you think is the most important thing in chart analysis? It's definitely not zones or levels, it's time. Since different financial centers trade at different times, these time periods are called sessions. So why are sessions in trading so important? First, absolutely every session has its own behavior pattern and a completely unique characteristic. Knowing this, you can adapt your trading to them, rather than arguing with the price time after time. Second, the specific behavior of each session will have a massive impact on the next one. So, together with context analysis and the models from this video, it won't be hard for you to determine the most likely behavior of the following session. Third, you will be able to tailor your setup to specific session models to trade only the best models at the best times. Let's start with the basics. We have 4 main sessions. We will look at them in New York time. Don't forget to check what time it is for you right now, whether it's daylight saving or standard time. Asian session from 7 p.m. to 2 a.m. Frankfurt session from 2 a.m. to 3 a.m. London session from 3 a.m. to 8 a.m. And the New York session from 8 a.m. to 11 a.m. Here I am only taking into account the most active time of this session. Note that the full duration of the sessions is longer and they overlap. For the sake of simplicity in this video, we will consider the start of the next session as the end of the previous one. First, let's go over the main characteristics of the sessions and the mistakes that are constantly made. Let's start with Asia. It is commonly believed that the Asian range is often very inactive and creates liquidity that Frankfurt and London will later work with. This is far from always true. It's not uncommon to see a very active Asian session that leaves imbalances behind. Frankfurt is an active and highly manipulative session, the movement of which will often be aimed at sweeping the nearest liquidity, usually Asia's. I never consider its movement as true, only as a manipulation, with one exception, which I will mention later: London. In my opinion, it's the most difficult session, which has more behavior variations than the others. It is critically important to identify exactly which one you are looking at. It could be the establishment of the true move, a prolonged manipulation, simply a consolidation and working with local intraday pools, or just a consolidation before the news. New York is usually the most active session, which will most often be one-sided, with or without manipulation. Rarely will New York stand in consolidation. It doesn't happen often, but it does happen. It differs greatly from London, which likes to move from the nearest liquidity pool to the next nearest liquidity pool. Almost all the most important USD news comes out during this time, which also adds to its volatility. Now let's go through each session in detail. Let's start with Asia and Frankfurt. I believe these two sessions should be looked at together. Combined, they will have a huge impact on London's future movement. The highly popular Asian sweep setup is built upon these sessions, and trading it leads to a ton of mistakes and catching a lot of stop losses. For myself, I divide Asia into 2 main categories: the one where I want to see a reversal after a sweep of one of its boundaries, and the one where I expect a continuation of the Asian move. To determine exactly which scenario I am looking at, I look at the following factors during Asia. Does Asia leave a strong 1-hour imbalance and liquidity behind it? Is Asia moving in a structural trend? Did Asia sweep a key liquidity pool? Was Asia in a strong one-sided move that left no liquidity behind? If we see one of these factors, we will often see a correction into the Asian imbalance or a pullback into a structural zone during Frankfurt or London, followed by a continuation of the Asian move. Or we might just take off without any correction at all. Let's break down the setups in more detail, starting with a 1-hour imbalance during Asia. First of all, it's important for you to determine if there is a liquidity pool behind this imbalance that could draw price in. If there is no obvious liquidity before this imbalance, then Frankfurt will most often behave as follows. It will either provide a manipulation into this imbalance, after which we will get a reversal during London and a continuation of the Asian move, or it will provide a fake move sweeping the nearest Asian boundary. And it is exactly on this move that many open their positions trying to reverse the Asian move, after which London will give a correction into the Asian imbalance and continue the trend of the Asian session, or, which happens less often, continue it without any correction. If there is a large liquidity pool behind the imbalance, it can act as a target for the price. In this case, the imbalance might be ignored, and we will get a sweep of this liquidity pool. But I prefer to skip such situations. For me, they are rather questionable. The same logic applies when we see a trending move during Asia, or a sharp move that leaves no liquidity behind. There is no reason for the price to reverse against this move unless, of course, there are obvious context-based reasons to do so. In this case, during Frankfurt, we will also most often see a correction, or no correction, followed by a continuation of the Asian move. And the last setup you shouldn't trade against. No matter how perfect Asia looks, if it swept a strong contextual liquidity pool, be it a daily or weekly fractal, the price can ignore Asian liquidity and continue moving according to the context. So, these are all the Asian setups where you don't want to open positions against its movement, which I highlight for myself. Now let's talk about the Asian session models where you want to get a reversal after a sweep of one of its boundaries. Essentially, I see two setups I would like to trade for a reversal. The first and most basic one, Asia is stuck in a consolidation. The second, Asia is in a weak trending move and leaves obvious liquidity pools behind. In such cases, we will most often see a manipulation during Frankfurt of one of the Asian boundaries, followed by a reversal and an opposing move already during London. Moreover, the Frankfurt manipulation can be strong, which isn't a problem for me since Frankfurt's role is merely manipulation, unlike London. If, however, London makes a strong move leaving imbalances, I will definitely not trade against such a move. London has a completely different role, but more on that later. One important exception: if a sharp Frankfurt move was caused by news, which happens a few times a month on the pound, I won't trade against it. In such cases, London will often just consolidate or continue Frankfurt's manipulation. Rarely will you see an inactive Frankfurt that doesn't sweep anything. In such a situation, the manipulation will most often happen in the first 2 hours of London. There is another situation applicable to these two setups that should be mentioned. This is the exception when Frankfurt doesn't play the role of manipulation, but the role of expansion. Sometimes, an hour before Frankfurt starts, Asia will manipulate liquidity, thereby taking on Frankfurt's manipulation role. Then, during Frankfurt, we will get a move sweeping the opposite liquidity, which can be seen as a reaction to this manipulation. In reality, things aren't as perfect as in pictures on the internet. And I think you've encountered London resweeping Frankfurt, or a prolonged manipulation during London more than once. To protect myself from stop losses due to a resweep, I pay attention to the following. Confirmation on the DXY. If I'm trading an Asian sweep on the euro or pound, I need it to be swept on the DXY as well. A lower time frame confirmation model on a time frame no lower than the 3-minute. The absence of a strong move during London. Usually, I determine this by looking at London's 5-minute imbalances. By following these rules, I skip many interesting situations, but I am much more interested in a high win rate than the ability to catch every possible trade. These are all the Asian and Frankfurt setups that I highlight for myself. London. For me, it is the key factor in defining expectations for New York. Also, it is perhaps the most difficult time intraday, as London has quite a few behavior models. I highlight 6 main London behavior models and 2 additional ones that occur quite rarely. Let's start with 2 models that look similar at first glance, but have a radically different impact on New York. The first model most often occurs when Asia leaves liquidity. Frankfurt manipulates one of its boundaries, but instead of getting a reverse reaction to this manipulation, London continues Frankfurt's move, doing so without sharp movements, without imbalances, leaving liquidity behind. I view such a move as a more prolonged manipulation during London. At the same time, my expectations for the price to visit the Asian liquidity pools do not change at all. Only the timing changes. In this case, I will expect a reversal and a sweep of the Asian liquidity during New York or pre-New York. Here, it is critically important to evaluate the kind of move London was making. If it was a sharp move with imbalances or a clear structural move, it will be a completely different model with completely different expectations. Because in those cases, London won't leave liquidity behind, meaning there will be no reason for the price to return to that area. This directly leads us to the second model. It is most often formed during a sharp Asia with imbalances, or an Asia that moves in a trend without leaving liquidity pools behind. In this model, London continues Asia's move, but does so with a sharp movement, leaving a 1-hour imbalance behind. In this case, this London move will be considered by me as a true move, which I will not trade against. Models that look similar at first glance will have a completely different impact on New York, and therefore on how I will trade them. While in the first model I consider a potential reversal of London's move, in the second one, conversely, I will not try to go against London's move. A correction into the imbalance will often support the price, or we will take off without correcting into it at all. It is exactly the desire to trade against a sharp London that was moving via imbalances without any nearby target like liquidity on the 1 hour that leads to a ton of stop losses. The next 2 models also share a great resemblance, but understanding their differences will also save you from a lot of mistakes. When we see that Asia leaves liquidity pools behind and Frankfurt creates a manipulation, you will most often see one of 2 setups. The third setup is a one-sided London move opposite to the Frankfurt manipulation, towards the not yet swept Asian liquidity. The price will move in one direction without changing it throughout the entire London session. As mentioned earlier, sometimes London performs a second manipulation and resweeps Frankfurt, which does not affect the identification of the setup in front of you. The fourth setup appears under the same conditions. The difference is that in this one, we will get a reversal of the London move after reaching the opposite Asian boundary. After that, the price will move in the opposite direction at least up to Frankfurt, exactly where your stop loss is if you trade the Asian sweep and trail your take profit. The problem with these two setups is that it is extremely difficult to tell which one is in front of you at the moment of entry from the Asian sweep. Hence the massive amount of stop losses when you trail your take profit beyond the opposite Asian boundary, after reaching which the price reverses and stops you out. And also when you try to trade the second sweep of the Asian boundary, as London will often just continue its one-sided move, resulting again in a stop loss. Based on this, I removed trailing the take profit beyond Asia without moving to break even and trading the sweep of the second Asian boundary during London from my trading strategy. And again, identifying the actual London move will be critically important. Let's look at two situations within the third setup. In the first case, London moves sluggishly, leaving liquidity behind, or simply stays in a consolidation after sweeping the opposite Asian boundary. In this case, we might get a potential reversal during New York. In the second case, London takes off with a strong move leaving imbalances, thereby creating an imbalanced zone that can become a potential point of interest for New York to continue London's move. The difference between these two situations is drastic. The next two setups are essentially the same thing, but their causes are different. Setup number 5 appears very often, typically before major news during New York. This happens when London or Frankfurt manipulates an Asian range that left liquidity on both sides, and then, instead of a logical move towards the opposite Asian boundary, London just stands in a consolidation. During the news, you get an opposite move or a sweep of your stop loss, and only after that, the move to the target. Based on this, I stopped trading major New York news using the Asian sweep setup. Setup 6 is the nastiest and my most hated one. It doesn't appear often, and I see no methods to fight it. But for the sake of the complete picture, I feel the need to mention it. Asia leaves good liquidity on both sides. There is no news during New York. You see a manipulation of Asia and want to catch the move to the opposite boundary, but Asia is not swept. London, after building up liquidity, continues the move, which New York also continues, leaving a ton of pools behind. Ultimately, you get a stop loss. And the last two models, which appear quite rarely and which I skip because they do not give me clear expectations for New York. Seventh is when, after a sharp Frankfurt move, the entire London session stands in consolidation. This most often happens after news at the Frankfurt Open. If news is the reason for this consolidation, I will skip this setup, at least until New York. And the eighth is when London continues Frankfurt's manipulation without leaving imbalances to consider a continuation setup, but also doesn't leave obvious liquidity pools to trade a reversal of this move. These are all the London models I look at for intraday trading. Knowing them will save you from a ton of unnecessary stop losses and give you a massive understanding of New York's future movement. And I'll repeat again, if you see an obvious session model, it absolutely doesn't mean the situation will play out the way you want. Absolutely all situations are unique, and you need to look at each one separately, inseparable from the context. Moving on to the final session, New York. Most often, this is the most active time intraday, especially its first 2 hours. Almost all major USD news comes out during New York, which increases its volatility. You cannot analyze New York isolated from the news. You must always know what's coming, and on release days, like non-farm, you should skip trading or at least move your position to break even, because due to slippage, you simply risk losing your account. On the screen, you can see a list of New York news events with the biggest reactions that you definitely need to account for. Before we talk about New York models, let's return to London once more. As you understood from the London models, its behavior has a major impact on New York. So for me, the most important thing when building expectations for New York is determining whether London left liquidity that New York can return to. If yes, then in that case, I will look for a potential reversal. Otherwise, I will look for a continuation. New York has 4 main behavior variations. A one-sided move without manipulations. A one-sided move after a manipulation or a correction. A manipulation of liquidity on both sides without a pronounced directional move, which doesn't happen often. and a highly inactive move, which happens extremely rarely and is just a consolidation. So I highlight only 2 models that I consider as potential trades. Anything that doesn't fit these models will not be considered by me. The first is when we see one of those London models, and we have the potential to get a manipulation of London's liquidity and a run for liquidity on the other side. In this case, the price will have obvious targets to provide a reversal, and the price won't be hindered by an imbalance or another point of interest. Also, the manipulation can happen during pre-New York, meaning about an hour before it starts, where New York doesn't create a new manipulation. The second model, conversely, is considered by me for a continuation, if the context allows. If not, I will not trade it for a reversal. I look for it when we see a sharp imbalance during London, meaning with those specific London models. In this case, I expect that after a correction into the imbalance or another point of interest, we will get a continuation of London. Note that for this setup, having some kind of target is critically important. Buy side, sell side, compression, or something of that sort. News, in turn, does not always go where you want it to. Keep in mind that data can come out against you, and no London imbalance will save you in that scenario. Also, sometimes the price will just fly away without a correction into your point of interest and give no pullback at all. Basically, these are all the New York models that I look at and am ready to work with. I pay a lot of attention to session analysis, but there are no such things as certainly or 100% in the market. We work with probabilities derived from history. Even the clearest and most understandable situation can easily reverse against you and fail. These are just my models and my view of the market, nothing more.